Traders in Nigeria, traders in Nigeria say Nigeria's external reserves dipped further to close at $39.5 billion. Chuka Nwachukwu, head of bonds trading at UBA, joins me for a midweek update of the money markets. Chuka, thank you so much for joining us today. Always a pleasure to have you on the show. Bring us up to speed on trading today. What were the highlights?
Okay, well, trading today was on the low-key side, but I'll just quickly take the highlight for the week. On Monday, we had a bond auction. The first one for Monday, on Mondays, usually bonds auctions are usually on Wednesdays. So we saw 150 billion on offer for both 2026 and 2042. The 2026 dropped from 10.95, it closed the previous auction, to 10.15. That's about 80 basis points drop. And then the 2042 dropped about 30 basis points from 13% to 12.7%. And so the market has followed that trend. We've seen rate drop on the bond side, significantly from the auction on Monday to today, dropped about between 5 to 6 basis points, and that's we feel would be the cost. I mean, that's what the market will follow through going forward.
I'd like your opinion or your take on the yield curve so far this week or in the last 2 weeks. What have you seen? How are you interpreting the yield curve movement?
Yeah, the yield curve movement has been on the downward trend. This is because of liquidity in the system. We've seen a huge bond coupon payment this starting from last month and to this month. So we expect that this will continue. This week we have a coupon payment, I think about today, about 18 billion. And next week we have about 131 billion, and then also that next week we expect FAC. So with the system awash with liquidity, we expect that the yield will continue to drop.
Okay, so what should we expect for the rest of the week? And for investors who are still grappling with, of course, the negative real return on investment, I was talking to another trader earlier today talking about that resistance level that you and I have talked about a couple of times, and he was saying that it would appear that the resistance level continues to shift and looks like downwards too. So it makes me wonder what's the whole point of talking about it in the first place. But what are your thoughts on that?
Well, we see resistance level around 9% on the 2026, and that is because if you see the 1 year on the T-bill side, 1 year closed, the last NTB closed at 4%, and it has traded downwards from 4% to 3.95, 3.95 levels. So the attraction is just on the bond side. So I mean, why would you want to buy a 1 year for 4%, and when you can actually do 2026 or 2025 for about 10%? So I see that this trend will continue in the near future.
Okay, final question. Let's go to the FX market. What is your take on how activities have panned out so far? I know that, of course, there's still demand at the INE window, but are we making any progress? I guess that's the best question to ask at this point.
Yeah, we are making progress. I mean, we've seen that the rate has hovered around 416.5 to 417, and so it's been stable within this range. So I don't really see any change for now, coupled with the fact that election is coming up and a lot of government expenditure. So we see that it will hover within this range.